Hi all, and welcome to another edition of our weekly report for the week starting Monday the 17th of June. We have a busy week ahead of us, which starts with UK inflation report hearings on Monday. On Tuesday we get the RBA meeting minutes and also Eurozone consumer price index and ZEW economic sentiment survey. Going forward, Japanese trade balance, UK and Canada consumer price index data, in addition to long anticipated FOMC interest rate decision and monetary policy statements, which could impact volatility across US dollar currency crosses and a range of US equities and also some commodities, are the main point of interest on Wednesday. On Thursday, we get the Bank of Japan and also Bank of England interest rate decision and statements. The week will finish on Friday with Eurozone manufacturing and services PMIs and Canadian retail sales. Now, let's take a look at a few of these markets. This is the intraday price action for euro-dollar based in 4-hourly time frame. Euro-dollar appears to be testing psychologically important support at 1.12 level. The previous week we were talking about the importance of the support around 1.1250, 1.1260, and on Friday we saw a dip lower and a loss of that fairly significant support as a result of US dollar strength caused by some economic data that was released on the day. Bears appear to be in control if we see the end of day close and the loss of this 1.12 level, so push lower, retest from underneath as a newly found resistance, would potentially open the way for a deeper retracement to the downside, initially targeting 1.1140. Loss of that level would open the way for the retest of 1.1080. Confirmed loss of that level could potentially target 1.10 to the downside. Alternatively, if we see a consolidation around 1.12 and a spike higher, any upside retracements, oversold bounce backs, as indicated by oversold stochastics in this case, are initially capped by that previous support at 1.1260. Confirmed breakout above that level and end of day close above 1.1260 would potentially target additional upside resistances towards 1.1350. Breakout above that level could target 1.14, 1.1440 on the upside. Sterling dollar price action appears to be quite bearish. We have the sequence of lower highs and lower lows. The price action is currently trading well below 20, 50 and 200 period moving averages. Key trading level for cable at the moment is around 1.27. Yet again, another round number. Bears appear to be in control below that level. The price action appears to be a loss of the support below that level out of something that potentially looks like a bearish flag, therefore continuation pattern. Any oversold bounce backs from the current lows into that resistance and rejection further supports bearish outlook, therefore a loss of support, retest of support from underneath as a newly found resistance and a dip lower could potentially target 1.2540, possibly 125, even 124 to the downside. Some more speculative traders are potentially looking at 1.23 to the downside. Alternatively, if we see a controlled sideways price action and attempted breakout higher, especially watch out for that FOMC rate decision and monetary policy statement reaction on Wednesday at 7 o'clock UK time. If we see a breakout and end of day close above 1.27, that would negate the current bearish outlook, potentially targeting additional upside resistances towards 1.2790, 1.2850. Breakout above that level could potentially target 1.30 to the upside. Dollar Japanese yen, yet again, keep an eye on, I keep repeating this over and over again, Wednesday FOMC rate decision and minutes on Wednesday at 7 o'clock UK time. Dollar Japanese yen is downtrending currently. It's currently mixed by 20 and 50 period moving averages in this 4-hourly time frame, but well below falling 200 period moving average. Key point of resistance on the upside is at 108.80. If we see a spike above that level and end of day close above that level, that could potentially trigger some buying, maybe short squeeze, potentially targeting upside resistances towards 109. That 109 is also very important because we can draw this falling resistance trend line by connecting the sequence of lower highs, pointing to that zone of interest. And yet again, give it enough time, 200 period moving average could be around that level as well. We also have a previous significant swing low at that level, so therefore a horizontal. So multiple layers of evidence pointing to significance and the importance of that 109 level. Additionally, if I apply some fibs from the swing highs all the way down to the swing lows, my 23% fib retracement is coming to the roughly same level as well, 109 area. So only the spike higher, a breakout above this falling resistance trend line, horizontal, previous low, fib, and also 200 period moving average could change the outlook, potentially targeting additional upside resistances, therefore US dollar strength and Japanese yen weakness towards 109.60, 110, 109.90, 110, 110.60 to the upside. Alternatively, if we don't see that and we see a rally and a rejection, or rally and a rejection there, or even a loss of these current lows towards 108.30, that would negate the kind of bullish breakout possibility, potentially targeting downside support towards 107.90, 108. Loss of that level could target 107.50, possibly even 107 to the downside. Gold had a massive rally higher, yet again indication of the potential rate cuts were perceived, and that was initially bearish for US dollar, therefore bullish for gold. And we also had a bit of a volatility with equity markets, so this was a kind of a safety play. But the key level for gold at the moment is at this support down here at 1330, 1330. Bulls appear to be in control above that level because that's 50 period moving average, and also below that we have 1313, 1310, which would signify this swing high here, and it would be very close to the 200 period moving average in 4-hourly time frame. Confirmed loss of that level could potentially target additional supports towards 1300 and 1292, which was that breakout level that everybody was talking about. Now, that would be a corrective pullback lower. Alternatively, if we see a shallow pullback lower and a rally, yet again, volatility can be impacted by the FOMC's data release on Wednesday. Keep an eye on resistance up here towards 1356, 1360. Breakout above that level could potentially target additional upside resistances towards 1370, possibly even 1375 to the upside. Some more speculative bullish traders are potentially looking at 1400 level for gold, or 1400 level. Now, crude, yet again, downtrending at the moment in 4-hourly time frame. Price is mixed with the 20 period moving average, but capped by 50 period moving average at the key resistance at 53.40. We had a geopolitical uncertainty. A couple of tankers were damaged in Gulf of Oman, and that normally causes a volatility to kick in and crude oil to kind of spike higher. So we had a bounce of this kind of significant lows towards 51.20 or 51 the figure. From the supply and demand point of view, inventories came in and they showed an oversupply, and expectation was for a drawdown. So from the supply and demand picture didn't change, but from the geopolitical picture there is a bit of uncertainty and geopolitical, possibly military risk. Now, from the trend point of view, this is still downtrending. I can draw a basic trend line connecting the sequence of these lower highs, and it's pointing to this 53.40. Yet again, another layer of evidence. So we have pivot, 50 period moving average, falling resistance trend line, and few other bits and pieces there as well. Now, only the breakout and end of day close and a spike higher above 53.40 could potentially target this sequence of the highs towards 54.50. Only the breakout and end of day close above 54.50 could potentially create a short squeeze and a spike higher towards 56, 57.60, which is our 200 period moving average. Only the breakout above that level targets 60, 62. Alternatively, either a rally and a rejection, or a gradual move lower and the loss of these current lows. If we don't see any escalation in geopolitical uncertainty, inventories would be closely watched. The US dollar reaction in relation to the FOMC on Wednesday would also impact volatility in crude. So the confirmed loss of these current lows around 51 would likely be closely watched by bearish traders who would be looking for a further corrective move to the downside, potentially targeting 50, 49, 20, possibly even 49 to the downside. Thank you for watching. Thank you for listening. Stay safe and happy trading. Bye for now.